Hi there everyone. Today we're going to look at how to use the mortgage calculators on the First Foundation website to quickly and easily calculate your mortgage payments, compare a few options, and get a good idea of whether or not you can afford a mortgage or not. If you're on the First Foundation website, just go up here to the mortgage menu and then right down to mortgage calculators. You can see I haven't published this video yet, but it will show up here in the browser when you're on the site. You can scroll down here and you'll see our main mortgage calculator. There are a few different variations of this, but this is the main one we'll use. And right at the top here you can see you can use this calculator to calculate your purchase financing, or if you've got an existing mortgage that you want to renew or refinance. For our purposes today we'll work on the purchase one. So if I wanted to buy a house, and I was thinking there was a house I was interested in and it was about $350,000. I type that in and then hit go. And right away you can see it gives me my down payment options. It gives me a few different choices: 5%, 10%, 15%, and 20%. Now if I wanted to override that, I could easily do that. Or I could put in another number like 54,000 here, and it automatically calculates these things for me. In Canada, of course, we pay mortgage insurance to CMHC or Genworth Canada Guarantee if we put less than 20% down, so that's automatically calculated for you. And here it gives you the total amount of the mortgage that you would have if you were to purchase a $350,000 home with these different down payment options. Step 2, we choose our amortization period. Now most Canadians are choosing amortization periods of about 25 years. But you could do a different option. If you had more money down, maybe you'd consider putting 20 years, using it over 20 years and seeing how that would impact your payments. Last but not least, you can put your mortgage rate in here and you can have it the same across the board for a nice easy comparison of amortization periods, or you could put your amortization period the same and choose different interest rates, maybe 3.09 for example, and it automatically calculates your payment on the fly. You can even choose different payment frequencies if that's something that you're interested in. Now because we're in Alberta, we want to make sure we choose our location. A lot of times this will auto detect for you, and this automatically calculates your provincial land transfer tax. Now in Alberta we're lucky we don't have that, so you can see that's land transfer tax. I think that's just a registration fee of the title. It's not even a tax. And this will give you the amounts you need to close on a mortgage. Down here you can see the cash needed to close if you were using one of the various scenarios here, what your other typical monthly expenses might be if you were budgeting, what might happen if your payment went up because interest rates moved. You can see different payment scenarios, things like that, and based on historical averages. And last but not least, you can get a good idea of what your amortization schedule would look like based on your selected scenario. It graphs it for you and shows you how much you're going to owe over time until finally it's all paid off. So I hope this was helpful. If you have any questions, feel free to contact us at First Foundation. Our licensed mortgage brokers would be happy to help you. And that's all for me for now. Bye.